It's 9 a.m. in Beijing, Shanghai, and here in Hong Kong. Welcome to Bloomberg Markets China Open. I'm David Ingles, and we are counting down to your last trading session of the week in the Chinese mainland and here in Hong Kong. Let's get to your top stories. This Friday, President Trump refusing to stop the clock on TikTok's deadline to exit its U.S. operations, even after Chinese regulations made it a tougher sell. And Disney's Mulan opens in China today, plagued by calls for boycotts, bad reviews, and a media blackout. Disney's CFO acknowledges the film has caused issues for the company. Welcome to the program. Good morning. If you're joining us across the region, lots to get through today as far as your top stories are concerned. There's always a dose of geopolitics. Market-wise, so we are on track for a second week of declines. Next, we speak to independent economist Andy Xie on why he thinks the ongoing tech war between the two sides will hit equity valuations. All of that coming up. Plus, of course, we are counting down to the last trading session of the week. Here's your approach. This is Bloomberg Markets China Open. Joining us now from Shanghai is Andy Xie. He's an independent economist specializing in China and also the Asia Pacific. Andy, good morning. A pleasure to have you back on the program again. Can you talk us through the thinking there? Why you think the equity bubble bursts because of what's happening between Washington and Beijing?
Well, I think that the semiconductor embargo against Chinese companies will shift the demand down. So the global demand will probably be weakening in the coming months. The second is that you look at the TikTok situation. This internet company, the story is that they have global scale and no government regulations. Now, neither is true anymore. So I think that the internet companies will be more and more country specific, and their growth potential will be limited. So that's why I think that the current enthusiasm for the tech companies is not backed up by reality.
Andy, do you think that applies more to the U.S. tech companies, though, than it does to China? And the reason I simply ask you that is you look at the likes of Alibaba, Tencent, to a lesser extent, the others, Meituan, Dianping. A lot of them are simply focused on the domestic market. They don't really have a big international market to lose.
To some extent, that's true. But you look at the valuation, there's hope that they can extend globally. So I think that if the market thinks that all these companies are capped at home, the valuation will be different.
Fair enough. Andy, let's talk about the economy. Do you think China's doing well right now?
Well, China is doing well relatively because that China has been able to keep the virus under control at home. So it's been quite successful in that regard. So the factories are going well, and other countries they don't have the same control. So their factories are having trouble getting production going. So that is why all these government stimulus, the helicopter money for people to stay home and spend money, a lot of that demand comes to Chinese factories. So this is the irony is that Chinese exports are doing really well. Even though the global economy is going down, Chinese exports are going up. So in the short term, China is benefiting from what's going on.
That's the easy part. That's the part of the economy, Andy, that's easier to control for Beijing. You simply, I'm not really saying simply, but that's, you can manage the industrial part of the economy better than you can manage people's expectations on consumption and confidence. What do you make right now of the Chinese consumer? Are they back yet? Are there problems there? What do you think?
Well, Chinese consumer is still pretty weak. You look at the pork consumption, it's very low. That appears to indicate the overall situation. The consumption weakness is related to this lack of helicopter money in China. The income was hit during the pandemic in the first half of the year. No government support. Therefore, the people have to really price in what income they have. So that's why the consumption is still relatively weak. It will take a long time before people can absorb the income loss they have suffered.
Is it a big problem, though, is the question many companies that are selling to Chinese consumers are asking? Because in the absence of, I would imagine, aggressive stimulus to stimulate Chinese consumption, it doesn't seem that it's in a very terrible situation.
I think that the consumption will struggle for quite a while. Now there's wage is firm for blue collar workers because there is a labor shortage. So in that regard, maybe if you are at the lower end of the market, you'll be okay maybe. But the big hope for middle class or upper middle class consumption is not panning out as well. We see actually quite a bit of deflation in that segment of the market. You look at the restaurants, you look at the coffee shops, the automobile. We do see deflation pressure there. So this is where I think the companies think that it's always the price going up in China. That is will be a surprise for them.
Andy, have a good weekend. Always sobering to talk to you. Andy Sia there, an independent economist specializing in looking at the Chinese mainland, of course, and the rest of the region, also dabbling in geopolitics with a mix there. This is Bloomberg.